Hey, how you doing? And welcome to Livewire's Buy, Hold, Sell. I'm Selby, and today we're going to be taking a look at a handful of stocks that could surprise to the upside this reporting season. To do that, we're joined by James Gerrish from Market Matters and Henry Jennings from Marcus Today. First up today, we have Goodman Group. The market loves this stock right now. 67% of the brokers who cover the stock rate it as a buy. James, I'm going to start with you today. Is it a buy, hold, or sell?
So it's a hold for us, Ali, and we do hold it. We have held it for quite a while now. Our last move has been a trim. So, I like the move into data centres. I think that's a really sensible strategic move to, underpin its next level of growth. I guess what concerns me a little bit in the short term is how the market latches onto a theme they like, bids the stock up on the back of that theme. We've seen it in AI over in the US. And then it's hot money, it gets impatient around when the earnings will flow from that theme. So right now, Goodman's been bid up on what I think is a really good strategy moving forward, but it now comes down to delivering earnings, and there's often a delay between those earnings coming through. So that's why I would have it as a hold, and we've got a small weighting still.
As you mentioned there, it's had a terrific run. Its share price is up 71% over the past 12 months. I wish I invested in that stock 12 months ago. Henry, over to you. Is it a buy, hold, or sell?
It's a tricky one, isn't it? I've got to agree with James on the hold thing, only because it is such a massive part of the REITs sector. But it has run, 71% for what we used to call property trust. These were the dull, boring sector of the market. 71%, and a lot of the extra kicker has been based on this, the data center push. That's not going to happen overnight. You've got to build the things. And that requires quite a lot of capital. I mean, it's founder-led, it's very successful, it's done an extraordinary good job. We hold it in the portfolios, but I think, it wouldn't come out as a sell, but it would come out as, just be a little bit cautious because the expectations are high. And even in the last little while, we've seen Goodman slightly underperforming things like GPT and Stockland and even Centre Group, not to a massive extent, but just a little bit of underperformance. So maybe, a trim. Well, I know we can't do a trim, but, so it's going to have to be a hold.
A hold sell.
It's going to be a hold, trim, sell.
Okay. Next up today, we have James Hardie. 47% of the 14 brokers who cover the stock rate as a buy, while 13% rate it as an underperform. A little bit more split there. Henry, do you agree? Is it a buy, hold, or sell?
I think James Hardie's still a buy. Very much leveraged to the US housing market, obviously. We are going to see rate cuts in the US. We are seeing an election year, and maybe that's holding people back a little bit in making those big decisions, especially when they're rolling over their mortgages, etc. But all around the world we need more housing. James Hardie, quality management, really quality management, doing a fantastic job. They've had a few headwinds in terms of the US housing market. I think they will abate as rates come off, and they've got great products, great leverage to that US market. So for me, it's still a buy.
Okay, its share price has lifted around 27% over the last 12 months. Over to you, James. Is it a buy, hold, or sell?
It's a hold, but a weak hold for us, Ali. So I agree completely around the macro environment in the US. So obviously, interest rate cuts are going to be a really positive thing over there. One of the things that drives renovations over there is the ability to refinance. So mortgages over in the US are tied more to long-term rates. So the expectation is that long-term rates won't come down as quick as shorter-term rates, and that in itself will potentially delay refinancing and delay the recovery in earnings that we're looking for in James Hardie. So to me, it's probably a FY26 earnings recovery story rather than FY25. So I think you can be patient. It's obviously had it's been volatile in share price. So it had a big decline in share price when their operational metrics struggle and their guidance struggled. They've got the investment community back on board after a strategy day, and they talk to their longer term plans and how they're going to guide the business moving forward. And I think all that has a real high degree of validity, and I think the strategy is a good one. I think from a timing point of view, you can wait until more into the back end of FY25.
Okay, next up today we have Super Retail Group, which is the parent company for brands like Supercheap Auto, Rebel Sports, BCF and Macpac. More of a mix in ratings from the brokers on this one. 13% rated as a buy, 33% believe it will underperform, and 27% rate it as a sell. James, what do you think? How do we make sense of all that? Is it a buy, hold or sell?
Ali, it's a buy for us. I like stocks that have got that mixed view from analysts. So, when all analysts have a view on a stock of a buy, I think that leaves a void of new buyers in a stock and the share price can actually go the other way. So, we own this stock, bought it in May, straight off the bat, it dropped 10% after we bought it, down to about $12. It's now well and truly up, in the $15 mark. So they had a couple of issues internally that hurt them, a couple of scandals internally. They highlighted some issues around second half margins that were, could potentially play into this result. The expectations at that time around interest rates were going to go higher, not lower. I think the case for an interest rate cut rather than a hike has built momentum. So you distill all of that down, and those things are transient. Those issues that impacted the share price are transient. Great brands. I was about to say great management, but it's got okay management. But I think they will do. I think there's enough there from a valuation and a catalyst point of view to see super retail go and test new highs.
Okay, it already has had quite a good year. It's up 29%. Over to you, Henry. Is it a buy, hold or sell?
Well, I had it as a hold, but the more I listened to James...
I know, it was very compelling.
I know, it was very compelling. That's what I love about this. You start off with one view and you end up listening to somebody else and you think, you know what? He's probably right. For me, I think I'm going to keep it as a hold. I mean, we're all getting very excited at the moment about the Olympics. So we're all going to rush off to Rebel Sport, aren't we? And going to buy new trainers and we're going to get in the pool and we're going to do all this. It's chilly out as well. Macpac should do quite well out of puffer jackets. There are some corporate governance issues swirling around them, which does tend to hold me back a little bit. And retail is going to be interesting because we've been hearing about this mortgage cliff. I don't know where it is. Where have we seen it? We haven't. I mean, I know a lot of people are hurting, so let's not be flippant about it, and a lot of people are hurting. But we haven't seen it show up in the banks. We haven't seen it show up in retail sales. The numbers out recently in retail sales were actually okay. And now we're starting to talk about rate cuts rather than rate rises again. So it's got a bit going for it. I'd like to see the results. I think you can be a bit patient in this one and just see how the first 6 to 8 weeks of this year has gone before you commit to it. So for me, it's still a hold.
It's because my generation of millennials are no longer eating avocado toast. We're spending our money at the shops instead.
We're blaming it all on you.
As you always do.
Yes, and you blame it on us.
It's true, 100%, it is true.
Yep.
Okay, we asked our guests to bring along a stock that they think can beat earnings expectations this reporting season. It's a bit of a hard one. You have to look into your crystal ball and have a little bit of a guess. What do you think, Henry, will beat expectations?
I think there's going to be a few that beat expectations, and the ones that do beat expectations are going to continue to push higher. The one that I'm looking at is Lovisa, which is an interesting company, and it is a retail stock, obviously, and what we've just talked about in retail applies to them, but it also occupies a segment which is kind of immune in some ways to the mortgage pressures that we've seen. We saw recently Universal Stores, which I love as well, come out with their results. And again, that's a sort of a millennial stock, people dressing up, and it's not quite, they haven't got mortgages, they're struggling with the rent. The margins are massive. Store rollout has slowed a little bit, but they've surprised 5 times out of the last 7 times. I think we could see a surprise again.
Okay, over to you, James. Which stock do you think could surprise this reporting season?
Well, I've got 2 daughters who love Lovisa, so they've been spending big in LOV, so that could be an omen. I think the thing that I'd focus on when we're thinking about surprises is always risky to do, but thinking about the expectations that are priced into the stock. So Car Group is the one I'll flag today, simply because if I think about the last 5 or 6 months, the stock's done nothing. The stock's done nothing because their customers are hurting. So the car dealers are hurting. They've got too much inventory on, and they're being pressured around their ability to spend. So there's this concern that Car Group won't be able to raise prices like they were expected to previously. So one of the acronyms that was thrown around when interest rates were low was TINA. There is no alternative. And I think that applies to the car sales business. There is no alternative for dealers other than car sales. And I think that will be a the defining factor for Car Group, and they've got a good history of beating expectations. So if I'm hanging my hat on one, risky to do, that would be Car Group.
Okay, well, I absolutely loved that episode and I hope you did too. If you did, why not give it a like? Remember to subscribe to our YouTube and podcast channels. We're adding so much great content just like this every single week.